veteran and chief strategy officer at Carlyle Group, said last week in this Bloomberg article that he believes this is the best long trade he's ever seen. He's talking about copper. We have mining magnates like Robert Freeland, who have been saying for a long time that the next 25 years will see more copper demand and production needed than the last 10,000 years combined.
Yeah,
Right? That's a huge number. Where is
yeah,
this production going to come from? How are we going to meet this demand?
yeah. Well, I hope that was a rhetorical question, David, because I just told you the main headwinds and problems for this.
This week, copper hit a new all-time high. What is going on? What are the demand and supply fundamentals pushing up copper to this never before seen price? And what is next for copper and gold? We'll be talking about both of these assets today because our next guest is the leader of a company that has both of these assets in their deposits. He is Luke Norman, co-founder and executive chairman of US Gold, USAU, listed on the NASDAQ. We'll be talking about his view on these assets as well as what's coming up for US Gold. Welcome to the show.
Thank you. Thanks for having me, David.
Luke, let's start by talking about copper. I believe you told me offline roughly 30% of your deposits are in copper. And we're going to talk about that first, then gold. Like I said, this week, copper hits a new all-time high, $11,000 a ton for the first time, more than $5 a pound. Now, just this paragraph in the Bloomberg article here, copper surged to its highest level ever, extending a months-long rally driven by financial investors who have piled into the market in anticipation of deepening supply shortages. Several demand factors the article listed, several developments in 2024 have emboldened copper bulls and drawn in a rising tide of speculative money. Tight supply of copper ore fueled talk of output cuts by smelters, and investors are betting that surging usage in fast-growing sectors, including EVs, renewable energy, and artificial intelligence, will offset the drag from traditional sectors like construction. Let's talk about the demand side first before we talk about the supply side, which is what you're involved in. Demand side, what do you think are the biggest drivers of copper usage going forward? I've listed a few. What are your thoughts?
Yeah, well, David, I've been preaching this for quite some time that the demand that the US is generating just through their entire electrification of the automotive industry, I don't think it's achievable. But what they are hoping and setting out to try and achieve is going to have a massive demand, not just for obviously the construction of these EVs, the electric vehicles, but then the transmission of the electricity to them is another whole feat. So you've got to electrify, grid the entire highway system in the US. It's a huge undertaking. And look, I've been saying as well for the longest time that just the servers required for what we believe is going to become of the AI industry, that, again, huge amounts of power transmission, huge amounts of copper required throughout the building up those servers. Yeah, the traditional measures of value on copper are out the window, and it's going to get very, very interesting over the coming years.
And do you agree that these will offset, I guess, drags from construction? I guess the assumption here is that
Absolutely.
the
Yes.
underlying assumption is that places like China, traditional drivers of copper demand, that will slow down as we're seeing less construction in housing, apartment building, infrastructure, and so on and so forth, right?
Absolutely. The US have recognized copper now as a critical mineral, critical element, and that alone tells you that they realize the importance of copper. The big producing nation, Chile, those massive mines, they're slowly running out of ore. In the US, the larger deposits that sit down in Arizona and then right up to Bingham Canyon, which is not too far away from our project, relatively speaking, not too far away from our project in Wyoming. These things are becoming exhausted. So you've got all this built up, pent up new demand, and supply is really challenging. And you and I spoke briefly before today, about how we're going to replace that production, because one, these big deposits, these big discoveries are very hard to come by, but also under the current bureaucratic mess that the governments have become, North America in particular, getting permits and getting access to actually go in and extract copper, it's going to get interesting, David. I think you're going to see much higher prices.
So the U.S. has listed copper as a critical metal,
Yep.
like you've said. That's correct. Why isn't the government, I guess, doing more to either subsidize this industry or fund it. We've seen the Biden administration loan out billions of dollars to the lithium industry, another industry that is labeled a critical metal or mineral,
Yep.
right? Is the same coming for copper, you think?
Yes, I think more and more focus will be brought over to copper in that regard. Obviously the feds need to get behind it. They need to free up the spigots in terms of how they can go ahead and permit these projects, ideally. And I don't think the Biden administration has been hugely complimentary to the mining sector. I think if there is a change in government in the US in November, that will be very helpful to the entire mining sector. But if there's not, I'm certainly not going to talk US politics here. I think the Biden administration or whoever follows it needs to really put some time and effort into thinking about how they're going to exploit their own mineral riches instead of depending on China, Russia, India.
These are some quotes from notable investors. Jeff Curry, commodities veteran and chief strategy officer at Carlyle Group, said last week in this Bloomberg article that he believes this is the best long trade he's ever seen. He's talking about copper. We have mining magnates like Robert Friedland, who have been saying for a long time that the next 25 years will see more copper demand and production needed than the last 10,000 years combined.
Yep.
Right? That's a huge number. Where is
Yeah.
this production going to come from? How are we going to meet this demand?
Yeah, well, I hope that was a rhetorical question, David, because I just told you the main headwinds and problems for this. We need domestic copper. We need it here in Canada, where you and I both live, but domestically, I think we can broach into, south of the border into the US. They desperately need it too. My project's in the US. They need domestic production, and the only way to do it is to loosen up the reins and let people go and explore and develop these deposits, because it's Robert Friedland is a brilliant, he's credited and noted for having been Steve Jobs' kind of mentor in terms of learning how to market, etc. And he's a mining magnate, as you mentioned. I've listened to him on copper for a number of years. I mean, we could go on about copper all day long. There's a myriad of uses, a ton of demand, and just the supply is just getting constrained.
What do you think are the richest jurisdictions in the world right now for copper?
Well, it's still, Chile, obviously, into, parts of Argentina, clearly. There's massive, massive copper deposits throughout Arizona, and I'm sure they could spread into Mexico. Mexico, I think we would all consider to be a friendly jurisdiction, NAFTA, North American Free Trade. But it's not a matter of where are the big copper deposits globally. Now, it is ensuring that they are somehow protected or kept safe, and the only way to do that is to have your own. So again, the bring in critical mineral space designation to copper.
Let's talk about to the gold side first now. Gold is another asset that has been breaching new all-time highs. So you're covered in all bases right now. Gold has just seen $2,400 again this week. It was slightly below that last week. Now the drivers driving gold, the market has been undecided as to what has been going on. I've heard one explanation, which is that the Chinese buyers have been piling into gold, pushing up physical demand. And of course, perhaps some investors have inflation expectation risks as well. What's your read on the market? What do you think is driving gold to new all-time highs?
Yeah, David, that's a great question. I mean, it's largely conjecture and hearsay. I do follow, and they very carefully cover the US Gold Council online, where the big buys and shifts in the gold purchasing are coming from. However, the reality is we've been under this fiat currency system for only 52 years now. 1972 was when the gold standard was removed and the fiat currencies were allowed to flourish. Now, ask Germany about fiat currencies, because they had two fail in around the First World War. Fiat currencies are renowned to fail. Why? Because they require the honesty of the people who judge over them, who see over them, which is politicians. I think we both know that an honest politician is a bit of an oxymoronic statement. These currencies are headed for the waste pile at some juncture. And it's highly unfortunate, but true store of wealth for over 5,000 years has been gold. There's a lot of people, not just I, that believe that. And that's actually what led to my interest in the gold space in the first place.
The gold price actually has been outperforming the S&P 500 this year, right? Up about 17% versus 11% year to date. Why do you think investor sentiment has been favoring gold, even though risk assets have seen new all-time highs this year?
I've felt for quite some time that's been a bit of an inelastic spread between the price of gold and the amount of dollars that have been created, especially through the COVID period where they just were printing dollars, printing dollars. So there's that natural catch up, I guess, the amount of dollars it takes of infinite dollars that can be generated to buy to buy a finite amount of gold that exists on the face of the planet. And again, gold is viewed or seen as the truest form of pure wealth in terms of storage, how to store wealth. So it was only natural that the price of gold would start to play catch up. And we're going to see it really start to accelerate, I truly believe. And you'll also see even more so a slingshot in the price of silver, because the silver to gold ratio is offside, just like the gold to dollars in circulation is offside.
Sorry, so you're saying that silver is going to
rally
start
even stronger.
outperforming?
Yes.
Why is that?
There's a historical kind of ratio between the amount of ounces of silver it takes to purchase an ounce of gold, just like the amount of dollars it takes to purchase an ounce of gold. The big difference, however, of course, is the amount of dollars in circulation is constantly increasing. It's just an endless, infinite supply of really just decimal points at this juncture in terms of how many dollars can be created. But you have a finite amount of gold and a finite amount of silver. And silver and gold, the ratio historically, even in more recent history, has been around 50 to 1, as low as 30 to 1. It's sitting around 100 to 1 almost right now. So you will see silver slingshot much higher as gold starts to rally, or continues to rally, excuse me, and starts to make up its lagging behind the true money supply.
Yeah, it was at 90 to 1 earlier this year. Now it's dropped down slightly to 75, but you're right, very close to 100. So what's next for the gold price? Are we seeing a plateau in the price for now? Can we expect it to go a little bit higher from here, or not so much?
Well, I mean, look, everything's relative to the term of the chart that you look at, as in how long the timeline is. But I certainly don't see gold being toppy or peaking here at any sort of real relative number. It certainly did in the 70s going into 1980, of course, because no one believed in the fiat currency system that had just been forced down their throats. So gold rallied from $35 an ounce to upwards of 800 and change. It was a massive shift in the price of gold. I think we're looking at another one of those massive shifts in the price of gold. But this one will be sustained, and this one will be maintained, because the faith in the fiat currencies is certainly starting. And that's why we see so much interest in cryptocurrencies. Why is that? It's because the younger generations who are not familiar with gold, they weren't around 50 years ago, are looking for alternative places to store wealth than having it in the fiat currency system. And I think, one of our largest shareholders is one of the biggest crypto miners on the planet. Okay. And he is a firm believer that everyone who owns cryptocurrencies should also own gold. And I think that message is going to get out there in time, and that's going to get better understood. And I think these younger generations, are going to start to recognize that just along with digital currencies, you should definitely have some gold ownership as well.
What's his rationale there, that they're both forms of currency, they're both money?
Correct. They're both forms of a currency, money, and they're not tied to the price or to the dollar, in terms of the dollar is going to fluctuate. More and more dollars are going to be printed, but there's a finite amount of Bitcoin, for example. There's a finite amount of gold that's above ground right now. So more and more dollars are going to be competing for those, static gold, Bitcoin type investment opportunities. So it's just a great way to hedge yourself against monetary inflation, because that's what's truly going on, David. Goods aren't going up in terms of their cost per se. They're going up relative to the amount of dollars that are chasing them. That's what that inflation is showing us. I mean, go grocery shopping.
It certainly seems that gold has outshone a lot of the monetary debasement, but it stands to reason that we don't use gold to buy our groceries, right? Or pay our
No.
taxes.
Yep.
There used to be a time when I guess we could do that, not anymore. How do you feel about that system right now?
Again, it's just a safe way to store your wealth. You can distribute your wealth into whatever fiat currency portions of it as you need it. Okay. You want to take some of your savings, then you swap them out for the dollars or whatever currency it is that you choose, just like with a cryptocurrency. I can jump on a plane, fly to Hong Kong tomorrow. I can, sell a Bitcoin and receive the local currency, and I can use it to live on quite simply. I don't think that people are going to be walking around with ounces of gold in their pocket to try and transact by any stretch of the imagination.
And that there used to be a time when people did that, but I guess we no longer need that. We have, more efficient ways to transact digitally. You're right. Okay, let's talk about the mining sector now. Now, your stock recently had a big pop. We'll talk about that. But your stock, notwithstanding that pop, the rest of the sector has been lagging gold over the last 12 months. Now, the GDX has been catching up in recent months, but over the last 12-month period, gold is up 23%. In the GDX ETF, which tracks the larger gold miners, it's up 15%. So why the underperformance relative to gold, do you think?
It's just laggard. It's just it's a natural progression of how these things work. First, you get the metals price move that creates more interest in the sector or in the industry, and then you start to see capital inflows into that industry, into that sector. So, generalist money, hedge funds, big funds decide they want some exposure over time because they see that it's not just a short peak or a brief rally. It's actually a real building, growing rally. They see the returns, like you mentioned, the performance of gold relative to the S&P. So money gets deployed into this sector, and then when it does, it catches up. And more often, well, you're better off leveraged in investing in gold mining stocks or gold exploration stocks than you are in purely in the metal when the metal is in a bull market scenario. Generally speaking, that's the case. You get far more leverage in the mining stocks than you do just owning the metal. However, that has not been the case yet. So that's just a natural progression of this cycle. So it's coming. There'll be people, when your taxi driver starts giving you gold stock buying tips, then you know it's getting near the top. I don't think we're anywhere near there.
The gold price really started popping earlier this year. Do you think the gold sector has had time to respond to this major move from $2,000 to $2,400 in the sense that are we seeing more drilling activity now, more
Nope.
financing activity, more M&A activity? None of
No,
that?
it's still laggard, and it is. Some would find that concerning. I don't. I think it's even more of an inelastic uh, event that elasticity is going to play catch up, and it's going to skyrocket into this sector. So no, we haven't seen a huge amount of capital inflows into the mining space or into the junior mining sector. And it doesn't scare me. It just makes me realize that it's a lot of pent up energy that's going to be released into our market, and we should be ready.
Well,
And
yeah.
sorry, go ahead.
What are people waiting for?
Um, Again, it's usually the influence that's brought forward by the larger investment funds that put money into the sector. It would be more rhetoric, hearsay, if I kind of gave you my opinion on what that is. But it's an event that is going to occur. You're going to see inflows of institutional interest into this sector, and that is going to drive M&A activity, which is going to drive share prices, create its own organic marketplace that will bring in a lot of attention.
So the institutional inflow needs to come first before all the other stuff. What
Yeah,
about the companies themselves? Are they being more aggressive in seeking financing right now at current prices?
not so much seeking financing, but take my company, US Gold Corp, for example. I just 6 weeks ago started a advertising campaign with CNBC and Fox Business, whereby I'm now advertising my company and its name on just the commercial television, because I think now is the time that people are going to start to listen. They want to familiarize themselves with certain names and get understand the concepts and the processes of investing in this sector, and then it will come. It'll surely follow along. Retail interest is a great driver, and we want to see that too. So that's where we're a little unique, David, at US Gold Corp. 99% of my peer group are all listed up in Canada, of course, on the Toronto Stock Exchange or the Venture Exchange primarily. I went, I skipped the middleman. I went listed this company straight away on NASDAQ when we kickstarted it in 2017. And the reason being is I've always had a belief that the US retail giant was going to get woken up at some point to either gold or copper, and I wanted to be on a platform where they could access us. So at NASDAQ, and I think we're trading, at the time of this recording, about $6.40 approximately. That means if you've got a Goldman Sachs account or whatever brokerage you're in the US, you can buy US Gold Corp tomorrow. Most of my peer group, the US retail, can't even access through their brokerage accounts. So,
well, speaking of your stock, there was a recent, we'll talk about your project in more detail, but I want to talk about your stock first. What happened here? There was a huge pop from 439 to now 640, like you said, in the time of our recording today on the 21st of May. This happened really just over the last week.
yes. Yes, well, the big thing, the most important thing, fundamentals. It's driven by fundamentals on us right now. Again, it's not because the market has suddenly awoken to the junior mining space. We were fortunate enough or diligent enough to be able to garner the permitting for our copper gold mine in Wyoming. So from a standing start in August of 2020, when I brought in our CEO, George B., who is an accomplished mine builder who built some of the largest gold mines on the planet for Barrick Gold Corp. I brought him in. We did collectively, the company, as our CEO in August of 2020 to now, May of 2024. We have managed to get the holy grail of what all us junior developers need, which is a permit to mine. And so the state of Wyoming issued us our permits to mine with a couple of little minor contingencies that we're just picking up on right now. But the market saw that, recognizes the importance of a permit to mine and the fact that we already have 1.5 million ounce gold equivalents reserve. And now we're starting to reflect that in our share price. And we're still a long way off where we would in a normalized market be trading. I think we're still grossly undervalued relative to the in situ metals price that we have the in situ value of the metals that we have in the ground. So another inelastic event that will be rectified by the marketplace in the coming months, I believe.
Okay, so yeah, let's talk about this project. You're talking about the CK Gold project, right? This is what you're referring to. So it was called Copper King. Just a few stats on your website. So, like you said, 1.5 million gold equivalent ounces, and a 10-year mine life at 20,000 short tons per day process rate. And you've got you've got initial capital of $221 million. So tell us about the history of this project. I think it was called Copper King before.
Yes.
Right. So, and then, walk us through what happened with the history and where it's at now.
Yeah. Well, I mean, Copper King was not discovered by us. It was discovered way back in the 1800s. It's called the Copper King because when you walk the surface of where, we will be mining, you see copper literally leaching out of the ground there. And it's in the Silver Crown mining district, which is 20 miles due west of Cheyenne, Wyoming. So great location. We're just off the I-80 highway. David, if you were to visit my project tomorrow, we'd fly into Denver International Airport and we'd be on site in an hour and a half in a rental car. It's a great location. But the other great part about that location is Wyoming. So very unique within Wyoming because we're on state ground. We managed to just deal with the state authorities and not have to deal with federal authorities. So that allowed us to move you know, properly, with the same amount of due care and responsibility to the environment and everything that we would be doing with a federal project, but actually deal directly with the state and with the officials and work through this, and in the space of 3.5+ years have this thing permitted. So that's hugely important because we have this in situ reserve now, and we have a permit to mine. We're what you call a bucket ready project. So 1.5 million ounces. I'll let you do the math on the gross value of those minerals in the ground right now, but it's creeping up on around $4 billion worth of situ value, and we've got to find a way now to exploit that to the best of our abilities to make the most profit and benefit us all as shareholders.
Currently, you're not producing yet, right?
Correct.
And when do you plan to get into production?
It's going to take us about 18 months from funding to building. Right now, we're now just establishing pathways for the funding of said build out, because look, we all are management. We're all heavily invested in this company, as shareholders as well. So we want to maximize the value per share that we can out of this project. So finding creative ways to fund the build out, to rely primarily on debt rather than diluting equity. That's kind of now the next step. So that's what we're focusing our effort in, is how to go about building that. Another exciting little component to this project that's not anywhere in the economics that you're currently checking out on our website is we discovered through our engineering process that our waste rock is a highly sought after aggregate source. So we'll have 30 million tons of basically $20 rock sitting on surface for free that we want to work out, hey, well, how do we go about exploiting this now? It's going to be clean, green aggregate because it's already had its footprint, carbon footprint from the mining side of things. So there's a whole bunch of pathways that we want to be able to show the marketplace that just add additional credibility and value to the project rather than just rush out there and raise capital and go into production. So there'll be a lot of good news coming out of this company.
So your market cap is currently at $59 million, correct?
Correct.
So on your website, again, it has an NPV, projected NPV of this project of $323 million. That's 6 times higher than your current entire market cap. Can you just walk us through how that number was derived?
Certainly. And that's an NPV 5, so that's at a 5% discount.
Yeah.
Right? Well, first and foremost, the metrics that we use, or the variables that we use to establish that NPV, $1,625 gold, $3.25 copper. I think, again, at time of taping, gold's trading around $24.20 per ounce, and copper is trading around $5 and change. I think it touched an all-time high of $5.13 today. So that NPV is significantly higher than what's represented in that 2021 pre-feasibility study. And yeah, look, but let's just use that number because that's our official headline number. That's what we call SK 1300 compliant, which is the regulatory designation for mining and how we report numbers. We trade currently at about 0.2 of our NPV 5 at $1,600 gold. In a normalized market, on an asset that was in a tough jurisdiction, it would trade about 0.4 of NPV 5 just as a reserve, and 0.6 in a more established jurisdiction like a Wyoming or Nevada. So we would, as a reserve, just be trading somewhere between 0.4 and 0.6. However, as you know, we just had a very big fundamental change last week. We got our permits to mine. That would now uplift the company's value metrics to about 0.6 to 0.8 of NPV. So, yeah, I'll let you do that sort of back of the envelope math.
One thing that I was wondering about is, again, going back to the initial capital, you're requiring an outlay of $221 million for CapEx, right, over the course of the life of the project. Again, that is 4 times higher than your current market cap. So I'm thinking from an investor standpoint, either you have a huge amount of capital to raise over the next couple of years, or it's probably just more feasible to have somebody else produce this project.
Right. Yeah. So that is part of that imbalance, that equation that I mentioned. Again, we should be trading, if I use those ratios of NPV, probably somewhere in the greater than $200 million market cap range right now. But that's fine. Mr. Market will work it out. The market's never wrong. As to that, the cost of build out versus our market capitalization, yeah, if we had to go raise that $222 million in equity, well, yeah, it's lights out for us, Mr. Shareholder, right? It's just massive dilution. So when I was rambling about pathways earlier and showing the marketplace that we have a pathway to fund this that is not going to be heavily dilutive, and that's going to be requiring debt. So there is vendor debt. We have to build and purchase a brand new mining facility, right? So just like going to GM or Ford, when you buy that equipment, or you want to go buy a new truck at GM or Ford, those manufacturers offer you credit to purchase that equipment. So there's that sort of form of funding. We also have some of our richest gold and copper mineralization at surface year one of production. So forward selling some of that gold and copper production is another potential alternative to funding. So the long story short, David, is don't see that headline number and think, oh my gosh, that's $222 million worth of dilution. And that number is going to be higher, by the way. That's a 2021 estimate. Okay. Remember, I told you about inflation. When there's dollars getting printed every day,
a
everything's
long time
going
ago,
up.
20, yeah.
Yeah, it'll be 260 right now, maybe. I don't know. We're going to come with an update on that, and you'll see that in the marketplace in the next 3 months or so. But our NPV will be significantly higher. Everything will be up.
So I think people might be wondering, how are you able to qualify for debt if you're not producing right now?
Because it's a pretty well-known industry sector, and there's a lot of individuals and banks out there who have been financing the mining industry for forever. Even the big mining companies, when they're going on to build a $2-3 billion mining operation, they don't just go into treasury and write a check. They arrange debt just like the rest of us. So it's a very, very normal course thing. Or if I was going to build a high rise in downtown Manhattan, right? We would go to a bank. So the same with the mining operation.
All right. Well, so what's next for you? What's the next step in this long process and journey?
Well, the long process and journey, thankfully, is behind us, really. For you, just becoming aware and learning about our company today, to prospective shareholders today, most of the hard yards and hard trails have been, taken by us and done. We've gotten over the major hurdles. But when we started in 2020 with this project, we were told we'd never get a permit for it because of its location, proximity to a town, etc. We were told that the economics were going to be challenging because it was a lower grade deposit. We have completely discredited what we actually officially call it. We've de-risked that side of the project in absolute. So now we can start to look at some of the more exciting add-ons to this project. Again, a very valuable source of aggregate that's sitting there prepaid for during our production cycle. Access to capital again, whether it be through state loans or whomever else we decide that we want to talk to. But we spent about $30 million to get to this point. We don't need to go and raise that $30 million again here. The majority of the dilution for this phase of our company has been taken on. It's been done. The shares have been issued. Now we're going to be a bit of a news generator, I think, for quite some time as we, again, show our ways, these pathways that are going to get us into production without huge equity dilution, that's going to bring additional value to the project. And look, I'll give you a hint, but even post-production now, it's looking like our used open pit will be used as a water storage facility for a local park that will basically save the park, it being a reservoir. So all these little bits of add-on that we can't wait to kind of talk to the market about over time.
Are you dead set on producing yourself? Is that like your strategic constitution here?
That is how we need to approach this project, and that is how we'll continue to approach this project. The harsh reality is, and it's not a harsh reality for you if you become an investor in this company, is we might generate quite a bit of excitement around the project that will lead to other companies wanting to come and add it to their portfolio of production. So I think we'll be an M&A target from this point moving forward, but we are approaching this that we are building this mine.
Well, even if it is an M&A target, I don't think the price has been fully priced in if you're
No.
assuming that the MPV that your company has done is correct. So
Yes.
certainly that hasn't the prospect of a merger hasn't been priced in fully yet. If that assumption is correct. Okay. Well, lastly, have you considered partnering with a royalty company, which is to say that, a royalty company would provide you capital, but then after producing, you would provide them a certain either percentage of revenue or percentage of your deposits?
Yes. We again are exploring every avenue that would make ultimately the ones that will make the most sense for us all as shareholders. And I did mention that up front, our first year of production is our richest year of production from a gold and copper perspective, 130,000 ounces of gold and 24 million pounds of copper. So, maybe forward selling some of that to an off taker or there are a lot of ways we can fund this project.
Thank you very much for your time today. I appreciate it.
Yeah, I appreciate it too, David. And thank you for taking the time.